Gold has headed lower for the past 2 consecutive weeks while remains in selling momentum in the current, falling to a new 2-month low on the 2nd of May. Clearly, gold's latest breach below known territory must signal a drastic change in sentiment among traders, allowing us to detail some economic developments through this report. We aim to be precise and to the point as an interesting week unfolds with a number of crucial economic events posing as potential movers for the gold market. Simultaneously, this report will present a technical analysis providing an insight on important technical levels and recent price action. My name is XAUUSD and this is the IronFX Gold Report for the 3rd of May. On Friday, the 29th of April, we got the US personal consumption rate, which rose to 0.2% from previous revised 0.1%, and the consumption adjusted rate, which jumped to the impressive 1.1% from previous revised 0.6%. At the same time, the Core PCE Price Index rates for March remained steady at 0.3% for the month, while the yearly rate ticked down to 5.2%. Expectations for lower inflation could have invited the sellers for gold prices. On the contrary, the data is positive for the US economy and provided a temporary boost for the USD index during the release. In this case, as the greenback receives support, gold may have been pushed lower due to their adverse relationship. Turning to the current week, on the 4th of May, during the late US session, we get the key economic event of the week with the Federal Reserve's interest rate decision meeting. This meeting will consist of the FOMC statement, the interest rate decision, and later the FOMC press conference with Chairman Jerome Powell going live. Currently, Fed's fund futures imply a probability of 93.9% for a rate hike of 50 basis points to be enacted, sending the overnight rate to 0.875%. In this case, a hawkish tone could possibly favor the US dollar. Yet, due to the market's anticipation for this important event, we could not rule out the scenario of gold's price action undertaking wide swings throughout the decision and press conference. On Friday, the 6th of May, we also get the important US employment report for April. For the time being, the unemployment rate is expected to tick down to 3.5%, while the NFP figure is estimated at 400,000. This is an event that requires extra caution, in our opinion, as the actual figures could create volatility waves across the board and especially for the gold market. We move now to our gold technical analysis. With the latest drop to lower grounds, gold has moved towards the S1 1845 support level, but has failed to breach it yet. In this scenario of further selling, we could see gold crossing into the lower range of our chart, which is highlighted with a gray rectangle. Below the S1, we note the S2 1820 level and lower the S3 1790 hurdle. Please note the gray rectangle was used from November 2021 to February and could act as a retesting of some previously familiar levels. If gold comes under buying interest, we note the R1 1870 resistance as the most probable level to be engaged. In the scenario of a move even higher, we point out the R2 1890 barrier as a possible next target for the bulls. The R2 has been tested various times in the last days of April, thus may be treated as a make or break point for a bullish trend. In the scenario of a move above the R2, we highlight the area noted with a blue rectangle, which may signal bullish appetite for the precious metal. We would like to note also the R3 1920, which was tested for the last time on the 29th of April. Finally, the RSI indicator below our chart has dropped below 50, confirming the selling momentum may still be in place. The overall trend, in our opinion, remains downwards, but a possible breach into the blue rectangle area on our chart can change into a sideways trend with bullish tendencies.